Hello and welcome to Unleashed. I'm your host, Will Bachman, with a little bit of a sore throat today, but we'll proceed nevertheless. I am really excited to welcome today Uday Turaga, who runs ADI Analytics. It's a firm that does a lot of work with oil and gas, with the energy, with the chemical industry. It's a boutique firm that serves clients globally. They've been around about 16 years, 20 employees. We're going to talk a bit about the range of that work the firm does and then double down and focus on data centers. So if you're curious about data centers and the energy needs, today is your episode. Uday, welcome to the show.
Thank you very much, Will. Thanks for having me. Kudos to you on this community that you have built. I've followed Unleashed for a few years now and also get your newsletters. Thanks for all that you do. And it's a very interesting business model in the consulting space.
Thank you. So why don't you first just give us an overview of your firm?
Yeah, sure. So ADI is a boutique consulting firm. We are based in Houston. We focus exclusively on three markets, oil and gas, energy, and chemicals. Within those markets, we work across the value chain. So if you take oil and gas, we work in upstream exploration and production, midstream, natural gas and LNG markets, and then finally downstream, that includes fuels and refining markets. We apply the same value chain wide coverage in energy that includes power, utilities, and energy transition, and then also chemicals and materials industries. We've been around since 2009, so a little over 16 years. We started off as a firm that was focused exclusively on oil and gas, then grew opportunistically into energy, power, and utilities markets. And then in 2017, we acquired another boutique consulting firm, just like ours, called Chemical Market Resources, that significantly expanded our capabilities in the chemicals and materials spaces.
Fantastic. We're going to focus on data centers like I talked about, but before we get to that, just to give us a bit more flavor, tell us about your oil and gas work. Like, what are the different types of examples, your capabilities there? Give us some example projects.
Yeah, sure. So maybe the best way to answer that question is to talk a little bit about the kinds of projects that we are working on as we speak right now. So within the oil and gas space, we work with a broad range of clients. We do a lot of work with the large oil and gas majors like Exxon, BP, and Shell. A lot of work with the E&P and refining independents. These are essentially pure play players within these segments, right? So companies like ConocoPhillips and Phillips 66. And then we also do quite a bit of work with the national oil companies. Aramco, SABIC are two examples, right? One in the chemical space and one in the oil and gas space. But it's for these clients, it can be a broad range of projects. We are currently helping a refining independent explore the opportunity for fuels in the Latin American markets. The US refining complex is now long on gasoline, and essentially a lot of these refiners are looking for export markets. Latin America has emerged as a key hub where a lot of US refined products are exported. So our clients essentially asking us to understand what does the long-term outlook look like for exporting refined products into Latin America. So that's one example of a project. Another project that we're working on is we're doing feasibility study for an LNG export terminal that's coming up here on the US Gulf Coast. This includes a pretty broad range of analysis in support of financing, essentially, what's the outlook? How's the competitive positioning of this project? What does the technology look like? What are the risks and things like that? And then the last piece is we are doing some scenario planning work for an oil major that is focused around long-term energy demand, and especially how is that energy demand going to be impacted, for example, from growing demand for natural gas, especially from data centers, and then more broadly speaking, growing use of natural gas in emerging markets globally.
Fantastic. Do the same thing for your chemical practice.
Sure. So The model is quite similar in terms of how we serve the chemical industry as well. We work with a large range of operating companies. So think of BASF, Dow, LyondellBasell, SABIC. These are all large chemical players, and we do a lot of work for them. Similar to the approach in oil and gas and energy, we serve them across the value chain. So we help them on the feedstocks, conversion into key building blocks in the chemicals industries such as olefins, aromatics, and then all the derivatives and further down into plastics, polymers, and how those plastics and polymers end up in our lives as consumers, right? So we kind of cover the entire value chain there. We essentially help clients with trying to understand the size of these markets, the cost competitiveness of different chemicals relative to assets around the world. The ability to access the feedstock is critical for any company to make these chemicals in a cost competitive basis. And as a result, there's variations in the cost competitiveness of making, say, chemicals in the US versus the Middle East versus Asia, right? So we do a lot of work looking at those trends. The chemical industry is very distressed right now. It has been distressed for the last couple of years. We've seen a lot of capacity shut down, especially in Europe, because of high energy costs and the lack of competitiveness on securing energy and feedstocks for the chemical industry. So we've been doing quite a bit of work helping a couple of the European clients try to understand, how much further is this tunnel? When are we going to start seeing some green shoots of recovery? What does the strategy to recovery look like? We are doing a lot of due diligence work. Some of the specialty chemical and materials markets have a number of companies that are on the shopping block, if you will. So helping a couple of private equity firms do due diligence on them. And then finally, there's a lot of impact on the chemicals and materials landscape from energy transition, the growth of hydrogen, energy storage, batteries. All of this requires new materials. All of this disrupts the traditional value chain. If you think of electric vehicles, for example, they tend to be lighter because they use a lot of polymers and plastics and other engineered materials. So what does that mean to existing supply chains? And we are trying to understand and map some of that for the chemical companies. So those are some of the projects, for example, that we are working on right now.
Fantastic. Let's turn to data centers. Before we get into specifically the work that your firm does, give us a little bit of a primer on what's happening with data centers. Maybe you can just keep it to the United States with all these hyperscalers. You hear it's like massive investment. Give us a little bit of an overview.
There's a lot of data center capacity that is being built, right? I mean, the US at the end of 2024 had close to like 3,000 data centers. That number is expected to grow very significantly. I mean, the number of data centers by itself is one thing, but we are now building data centers that are much larger, what people refer to as hyperscalers, right? So we are seeing a lot of that data center capacity come up around the US. A significant chunk of the existing data center capacity has centered in and around Northern Virginia. Almost a third, a little over a third of data center capacity is in Northern Virginia today. But if you look at where new data center capacity is coming, that's all over the US. We are seeing a lot of capacity come up here in Texas. We are seeing some of the hyperscalers build data center capacity in places like Oklahoma. Those are the proposals in Louisiana. So, when you think of like why are data centers moving to some of these other spots, a lot of the underlying drivers there are related to their ability to secure energy and power for these data centers. So collectively, right, we are seeing a lot of growth in and around data centers. We are seeing a proliferation of these data centers beyond their traditional preferred locations, and a lot of that is being driven by the need for these data centers to secure electricity. That's in a nutshell, right? That's what's happening in the data center space right now.
A large data center, one of these hyperscalers, how much electricity do they require?
So the ask from these tech companies is about a gigawatt, right? 1 gigawatt data centers is what most of these hyperscalers want to build. But they are finding that it's becoming very difficult to secure a gigawatt of capacity. And as a result, a lot of them are essentially changing the way they go about building data centers and are now willing to consider building data centers that'll need about a few hundred megawatts of power demand, right? So, but that's the range that we typically see.
And put that in context. So, like, how many households, for consumers, would it take to consume 1 gigawatt? And like, what sort of power generation does that mean? Like, roughly one nuclear power plant, or put it in context for us.
Yeah, I mean, so if you think of at scale, commercial, modern gas-fired power plant, or in emerging markets, coal-fired power plants, that's anywhere from 300 to 500 megawatts, right? If you think of a typical nuclear-fired power plant, that's about a gigawatt in capacity, right? So I mean, now think of like how much, think of the time it takes to build a new nuclear plant on stream, right? That's several years. And that's not accounting for the fact that most new nuclear power plants have struggled in terms of the ability to bring those projects on time, on schedule, right? I mean, in general, right, all infrastructure projects tend to run into cost and schedule overruns. So that's one way to think about it, right? I mean, these are very large expectations of electricity demand from these data centers.
And how many households is that? 1 gigawatt. How many like consumer households?
I should know that. I don't know that off the top of my head though, but I would expect it's several hundreds to thousands of households on an annual basis.
Let's find out. How much electricity does the average household in the US consume per year? Or actually, it's not per year, just consume, right? Because it's a megawatt. That's a measure. Okay, so the average US residential utility customer consumes about, it says 10,500, let's call it 10,000 kilowatt hours per year. But we want to know kilowatts, right? So we want to know, right? So put that in terms of kilowatt, right? As opposed to like, so kilowatts per year. So
Yeah, so that tells you that roughly probably 1 million homes, right?
well, it's like, yeah, it's like 1.25 kilowatts. So that's like 10 light bulbs, or 12 light bulbs. But let's just call it a kilowatt, like order of magnitude. So that's 1,000. So that's a million households.
Yeah.
So one of these hyperscalers is equivalent to one nuclear power plant in generation, or a million. That's a whole city. A big city, a
Yeah.
million households for just one big data center. That's wild. Like, okay, we're going to build, I don't know, what's a mid-sized city? Dallas. Yeah, we need to build enough electricity for Dallas. What? Oh my God. So that's like crazy. That's like we're building
Yeah.
a whole
So
city.
now if you think of like forecasts, right? Like how much power do we need, right? People are saying somewhere between 60 to 100 gigawatts by 2030 of additional power generation capacity for these hyperscalers. That's a very large number. The US hasn't added that kind of capacity in many, many years.
It's 100 nuclear power plants.
Yeah.
That's wild. We can barely build one. Oh my God. And okay, so and then tell us about some of the challenges that they have, not just, I guess, finding the power, but the new power sources also have trouble getting permission from the independent system operators, the ISOs, to connect to the grid, right? Because the grid infrastructure can't handle it.
Yeah, absolutely, right. So when we have looked at this, one of the key challenges is that it's taking a very long time right now to add a new power generation, to add new power generation capacity to the grid, right? So this whole process is referred to as interconnections, and interconnection queues have gotten very long, right? In some cases, these interconnection queues now take multiple years, right? There's a lot of reform that is underway across all the transmission grids within the US to resolve some of these delays, but it's still backlogged, right? And so power generation capacity by itself is not the challenge. There's a lot of power generation capacity that could be brought on stream quickly, especially renewable power generation capacity. But renewable power plants tend to be smaller in size, and therefore you need to bring a lot of those plants together in order to feed these new data centers. And with all these delays, it's becoming challenging essentially to make power available for all of these hyperscaler projects, which is why you see these hyperscalers essentially pursue a broad range of strategies in terms of securing power, moving to non-preferred locations, establishing partnerships with existing utilities to revive mothballed nuclear power plants, for example, invest in early scale technologies like geothermal, establish partnerships to accelerate small modular nuclear reactors. So these are all some of the things that we are seeing these hyperscalers pursue in order to access power for their data center projects.
You hear a lot in the news at sort of that level of detail of like, oh, interconnection, it's a challenge. Can you walk us through like sort of the process end to end of what has to happen if we want to build a new data center in Oklahoma or Kansas, wherever? Um, what has to happen in terms of, building that power generation, connecting it to the grid, getting permission for connecting the grid to the data center and getting all the permits? Like, give us a little bit of a end to end process of the things that have to happen in the world.
Yeah, so the biggest concern that grids have when they are adding new power generation capacity to the grid, right, is the impact that it has on the resilience of the grid infrastructure, right, or the grid more broadly speaking. So there's a lot of effort that is spent on trying to understand how will the resilience of the grid change when I add new power generation capacity. Is this new capacity dispatchable, or is it available only certain times of the day? A lot of solar capacity, for example, is not available around the clock, right? So what does that mean if I am bringing this new capacity on? Does that mean that I need to have additional backup capacity, whether it is in the form of energy storage or it's in the form of gas-fired power generation plant that's available to fill the gaps? So all of this, and because these grids are highly complex with hundreds and thousands of power generation sources that they are trying to actively integrate and deploy so that people have access to power in the most cost competitive fashion with the least amount of downtime. There's a lot of studies that have to take place, and these studies are slow. They take a lot of time, and that's one of the drivers behind a lot of delays that we have seen. The grid infrastructure and the processes that we use at a lot of these grids have also not been modernized, right? So they have been designed for a very different growth dynamic. And now that this growth dynamic has changed significantly, reforming these grids has become more challenging. There's a pretty significant component associated with public participation and public input into the process. And that tends to be slow. And increasingly, there's a lot of resistance that is coming in from communities around the world where some of these data centers are coming up. These data centers do not tend to be large employers. You don't need a lot of people to run a modern hyperscaler or data center. And as a result, the relative employment impacts of these data centers tend to be small. But on the other hand, there's a significant amount of power generation capacity that they can consume that can have a pretty material impact on electricity costs. And electricity costs are rising all around the US, and people have started noticing it, and people have started connecting them to the growth of these hyperscalers. And that is leading to a lot of challenges and opposition in that phase when you're trying to bring or permit a new data center and connect that into the grid, right? So those are some of the places where we are starting to see a lot of delays.
Sounds like there's an issue with the grid. What to what degree are some of these data centers trying to just build their own power generation like right next door and forget about the grid? Just have a direct line from your own nuclear power plant to your data center.
Yeah, so that's referred to as co-location, and we are seeing a lot of that happen. There's been a pretty significant growth in those kinds of projects. So AWS did a partnership with Talon where they are essentially co-locating their data center near a nuclear power plant that's owned by Talon, right? So essentially, we are increasingly seeing models like that. But there are serious limitations, right? I mean, there's not a whole lot of opportunity there. Some of the low-hanging fruit has been picked already. So Microsoft did a similar project, for example, with Constellation, where they are restarting one of the 3 Mile Island units within a couple of years. Um, and but there's not a lot of places where you can co-locate data centers and secure the volumes of power that a lot of these data centers need.
Tell us about some of your projects that your firm has done related to data centers.
Yeah, so this has been an interesting space for us. A lot of the questions that have come to us have focused on how much power will these data centers need? How are they going to secure that power? What does it mean for companies developing a lot of independent project developers that are developing power plants to serve these needs? Who are the best customers they should be chasing? But we are also getting a lot of questions from the large oil and gas and energy majors who are asking, what is the opportunity for us here? How do we participate in this space? Does this mean that there's an opportunity for us to get into the power generation space? Can we leverage our gas resources to produce power for some of these data centers? Are there opportunities for low carbon energy sources like hydrogen, for example? And where do those opportunities lie in serving these data centers? Because a lot of these tech companies continue to be fairly committed to using low carbon energy for their data center applications. So as a result, that's driving a lot of interest in low carbon energy, whether it is geothermal. Meta did a partnership with an early stage company in the geothermal space. A lot of interest in nuclear, especially small modular nuclear reactors. Similarly, some interest in hydrogen. There's been some work that we've been doing with the large tech companies and the hyperscaler data center developers on helping them identify sources of low carbon energy as well. So essentially, our work has kind of tended to span that entire value chain that you see, working with the energy companies, working with power plant developers, and then working with some of these tech players as well.
Tell us a little bit about geothermal. Is that just still kind of thing out in the future, or are there actual geothermal plants today? And explain how that technology works.
Yeah, sure. That's interesting. But one of the earliest projects that we did in the life of ADI was a big study on geothermal for the U.S. Department of Energy. This was during the Obama administration when there was a pretty significant push towards low carbon energy technology development. So yeah, I mean, so geothermal, you can segment it in a couple of ways. The technology, there's the traditional geothermal technology where you essentially find a pool of hot water, you bring the hot water up to the surface, use a heat exchanger and extract that energy out to generate power, right? I mean, so essentially think of this as monetizing hot water springs that you find in places like Yellowstone, for example. But there is only a limited amount of those kinds of hydrothermal resources. That's what that particular segment is referred to, hydrothermal resources. But if you can go deeper down in the Earth's surface, the temperature rises pretty significantly, and that's the promise of what people refer to as enhanced or advanced geothermal systems. The challenge is that you have to engineer these reservoirs. You have to figure out a way to go further down. You have to inject water or some other fluid that you'll use to kind of extract the heat from the subsurface, bring it up to the surface, and essentially again, use a heat exchanger to extract that energy and produce power. EGS, enhanced geothermal systems or advanced geothermal systems, have been the focus of a lot of technology development now for 30, 40 years. A lot of challenges with the technology. The drilling in deep down is expensive. Traditional drilling technologies that we use in the oil and gas industry are not designed to handle those kinds of temperatures, and as a result, you have to modify some of these drilling technologies. A lot of geothermal resources are found in areas with where there's a lot of granite, and drilling into granitic rock is challenging. Takes a lot of time, and existing technology still needs further development. Engineering that reservoir in the subsurface is not easy. You tend to lose a lot of the water that you inject down, and so how do you build a closed loop reservoir is one of the challenges. So so there's a lot of work that's underway. There's a entire new generation of early stage companies that are pursuing the development of these technologies and projects, and they have received a lot of traction and interest. A lot of them are focused on leveraging advances in oil and gas exploration, production, drilling technologies that have accelerated in the past decade because of the shale revolution. So a lot of this has to be seen, but there's a lot of momentum right now around the space.
Mm. Tell us about these small module nuclear plants.
Yeah, I mean, that's one of the most interesting parts of the energy landscape right now. The idea is essentially, you take, I mean, there are multiple approaches here. There are obviously early stage companies that are developing entirely new pathways around nuclear power generation using these SMRs, but there's also approaches where you're taking conventional nuclear technology, but just trying to build it at smaller scale. So again, a lot of early stage companies, some of these have been around for a long period of time, while others are, have come up or have sprung up, I'd say, in the last decade or so. We are now in the early stages of a lot of these companies and technologies in terms of their commercialization. We have For example, a project that's coming up here on the US Gulf Coast with one of the large chemical companies that is focused on using SMRs for power and heat generation for one of the chemical complexes here on the US Gulf Coast. But then we have similar projects that are coming up for a broad range of applications. The biggest driver for a lot of this new support that we see for nuclear is coming from the just growing electricity demand that's coming from data centers, but also more broadly electrification that we are seeing in the industrial complex. We also see a lot of desire in a lot of end-use markets for clean power, but the cost of clean power is rising, and so that's driving a lot of interest in nuclear power. But then there's also been a lot of innovation that has occurred in the nuclear power space. And in the last few years, starting with the Biden administration and now further accelerated in the current administration, we are seeing growing policy and regulatory support, right? So essentially, we see a lot of drivers for SMRs, but some of the challenges are fairly significant, right? I mean, permitting and regulation and licensing of these small modular nuclear reactors is still very slow. Significant engineering and construction risk. We haven't built a nuclear plant on schedule, on time, on budget for many decades. And then most importantly, right, the safety perceptions in society. Nuclear still is viewed with a lot of concern from a safety point of view. Some of that is shifting. This is the first time after many decades where there is a greater willingness in society based on surveys in their willingness to consider and adopt nuclear than ever seen in the last 50 years. So that's somewhat promising. But if you look at the number of companies that are in the early licensing phase versus, let's say, further behind in the pipeline in the pre-application phases, right? There's only a couple that have moved into the early licensing phase, and most of them still need to navigate this regulatory and permitting process, and that's going to take a lot of time.
Now, we aim to kind of stay non-political on this show. So I'm curious your perspective. If you ask people in the industry, like what's going on, the Trump administration, you see news articles how they are working hard to shut down a lot of offshore wind projects that are like close to complete or even complete. Same with solar. What's sort of the steelman case? What's the driver behind those, do you think, of trying to, given what you've talked about the demands for energy in this country, is it your sense that it's oil and gas interests that are pushing that because they see that as a competitive threat? Or like what would the rational argument be to work to shut down offshore wind that's already like almost built? What's going on with that?
Yeah, like if you were to look at a logical overarching framework to kind of connect the opposition to some renewable power projects versus others, the support for nuclear, or how a lot of policies are being developed. It's kind of hard to kind of put together a logical framework around that, right? I think the energy needs that are out there for AI, data centers, electrification of industrial and transportation segments, and more fundamentally, right, as emerging markets grow and develop, right, they need energy, right? So collectively, the world needs a lot of energy, and all of the above approach, or truly all of the above approach, is critical, right? I do not think that one energy form or source is the silver bullet, right? There will be applications where solar and wind will make a lot of sense. There will be a lot of applications where nuclear is the only solution, right? And then there'll be a lot of applications where it'll be very hard to displace oil and natural gas, right? So essentially, we need policy frameworks that are supportive of all of these technologies. And it is unfortunate that both ends of the political spectrum have locked themselves into these positions where a truly all of the above approach seems difficult to achieve, right? For whatever reason, right? So, for example, the Biden administration, I think, did a great job of supporting a lot of energy transition technologies, but pausing the development of new LNG export projects was not constructive. It did not make any sense because in the near term, if you can displace a lot of coal-fired power generation with gas-fired power generation, that is a huge win in terms of reducing greenhouse gas emissions.
And I only learned this recently, but like not everybody might know it. You might think, oh, you're burning stuff, same, same. But I believe it is the case that for the same amount of energy output, natural gas is a lot lower in terms of carbon output than coal, right?
Yeah, absolutely. So if you look at greenhouse gas emissions in the US over the last 15 years, we have cut that down by 25%, right? So, if in 2010 someone came to you and said that, hey, I can help you cut down CO2 emissions by 25% over the next 15 years, you would have said that that technology or person or organization should get a Nobel Prize, right? I mean, but that is what the US has accomplished. How has it accomplished that? It has accomplished that by essentially displacing a lot of coal-fired power generation with natural gas, right? Is it the best solution? Is it the ideal solution to decarbonize the world or decarbonize the country? Probably not. But I'd rather lose 5 to 10 pounds today as opposed to hang myself to the goal where I need to lose 50 pounds, right? I mean, some progress is better than nothing, right? So therefore, this opposition to gas and LNG is irrational, right? And on the flip side, right, I mean, you have a lot of these projects that are in flight, whether it's offshore wind projects, whether it is green hydrogen projects, whether it's energy storage projects. A lot of these leverage the competitiveness of US infrastructure and markets and technology. I think a lot of, making it difficult for a lot of these projects to cross the finish line also is equally not constructive, right? So I think that's been one of the challenges, right? There was a cartoon in one of the leading newspapers when I was a grad student at Penn State getting my PhD there, which had, 8 or 10 US presidents, and all of them were saying some version of the fact that we need a US energy policy, right? So it feels like you could add some of the precedents that have come in the last 15 to 20 years since I finished grad school. And to a certain extent, it feels like the problem still continues, that we don't have an energy policy that is truly in alignment with this all of the above approach, right? Because at the end of the day, right, the markets are really work, right? I mean, it will be very hard for solar to fill a gap where natural gas is the most competitive. And similarly, it'll be very hard for natural gas to compete in markets where solar is very attractive. India is a good example here, right? So why don't we just let the markets work? And essentially, I think 15, 20, 30 years from now, we're going to end up at a place where we'll just see a much more fragmented energy landscape where different technologies all have a certain share of the market based on applications and end users and niches where they are the most competitive.
Fantastic. Uday, thanks for joining. Tell us again how to find more about your firm. Where should we go online?
Yeah, the best place is our website, which is www.adi-analytics.com. You can also find me on LinkedIn.
Fantastic. And we'll include that link in the show notes. Thank you for joining today.
Thank you very much for having me.